Hi, I'm Brock.
I'm Jim.
Before we get started, if you want to stay ahead of the cattle markets, sign up for our free daily briefing at herdadvisor.com. It's delivered right to your inbox every morning, 5-minute read. And if you've ever wished you could keep complete cattle records without the clipboard, the Cattle Record Guide lets you enter records from the field with your gloves on. Just say, "Hey Siri, try it free for 14 days at herdadvisor.com. Welcome back to Cattle Market, guys. I'm Brock, sitting here with Jim, and we've got a loaded Tuesday for you on July 28th, 2026. Let's get right into the numbers because there's a lot of movement to unpack. Looking at the latest data, 500 to 549 weight steers are trading around $419.18 per hundredweight for the week of July 19th, and that's actually down from $433.62 the week before. Meanwhile, 600 to 649 weight steers came in at $385.52, also softer than the prior week's $401.50.
That's a pretty quick slide for 2 weeks, Brock.
It is, and the futures are telling the same story. Front month futures dropped from $352.27 down to $346.93 in that same window. The cattle site reported feeder cattle futures hit fresh lows not seen since early June before firming up on Thursday and then stabilized again Friday as everyone waited on that cattle on feed report. According to our national forecast, the 500 to 549 weight class is projected to bounce back to around $410 per hundredweight next week, then climb toward $431.53 by week 2. That's a pretty sharp recovery if the models hold.
Well, models are like weather forecasts out here in West Texas, about right half the time and dead wrong the other half.
Fair point, but the volume context is worth noting too. We saw average volume through most of July, but back on June 28th, volume was light with only 503 heads sold in that 500 to 549 bracket. That's a thin market, and thin markets can create some wild price swings on both ends. There was also a piece from Beef Magazine covering the RCALF USA convention, where University of Nebraska-Lincoln researchers presented on farm-to-wholesale price spreads. More questions than answers, as the headline says, but it's a conversation producers should keep an eye on, given how packer margins have been scrutinized lately.
Let me tell you what, every time somebody studies that spread, the answer always seems to land the same place, farther from the guy who's out there feeding cattle every morning.
That's the perception, certainly. All right, let's shift into our first deep dive because this one's big, the U.S.-Mexico border situation. USDA announced a phased reopening of southern livestock ports, and this is huge news for the industry. Starting August 24th, 2026, the Douglas, Arizona port of entry reopens to cattle trade, and there are additional steps being initiated for Santa Teresa and other ports as well. This ends a ban that lasted more than a year, all stemming from New World Screwworm concerns.
More than a year, that's a long time to have that spigot shut off.
It really is, and it's had ripple effects throughout the feeder cattle supply chain. On the biological control side, there's a fascinating development out of Panama. U.S.-funded facilities are launching the first outdoor tests of genetically modified screwworm flies using something called NovoFly technology. If those field trials succeed, it could double the sterile male output, which would dramatically improve eradication efficiency. That's a real technological leap from where this fight has been for decades. Jim, this whole screwworm fight isn't new to you, is it?
No, sir, that takes me back to 1980. We had screwworm scares hit some herds right along the border, and it wasn't pretty. Ranchers were checking every cut and scratch on their cattle twice a day because that fly could turn a little nick into a real problem fast. USDA had that sterile fly program going, dropping millions of sterile flies out of planes down along the Rio Grande, and folks were skeptical it'd even work.
How long did it take to actually see results back then?
Took a few years, but it did the job and pushed screwworm clean out of Texas for good. Made us all border closure veterans early, watching that Mexico trade get squeezed while they got it handled. This NovoFly thing sounds like the great-grandkid of that same program.
It really is a continuation of that same strategy, just with modern genetic tools layered on top. What this means for producers right now is a supply chain that's about to loosen up gradually rather than all at once. That phased approach through Douglas first, then Santa Teresa suggests USDA is being cautious, which makes sense given the stakes, but it also means the full flow of Mexican feeder cattle back into U.S. markets is going to be a slow build rather than a flood. There's also a related pest alert worth mentioning. The Asian longhorned tick has been identified as an invasive threat to U.S. livestock, and that alert came out alongside these broader concerns about pest-related trade risks. It's a reminder that screwworm isn't the only bug producers need to be watching.
Feels like we're always fighting something with 6 legs or fewer scruples than a screwworm.
That's one way to put it. Let's move into our second deep dive now, which covers global beef trade and export policy. And there's a mixed bag of news here. The headline number that jumps out is that total U.S. beef exports are down 17.2% year over year from January through May of 2026. That's a significant decline, and it signals real challenges in international beef demand right now.
17%, that's not a dip, that's a drop-off.
It's substantial, and it's happening even as we're seeing some positive developments elsewhere. The cattle site reported that the U.S. and Chile agreed on 34 new beef cut names for their export market, effective July 15th, bringing the total approved U.S. beef cuts for the Chilean market to 98. That's a small but meaningful expansion of market access. On a bigger scale, Ecuador and Canada signed a free trade agreement covering 227 protected agricultural products, including meat and dairy, with 99.6% of exports becoming tariff-free. That's not directly a U.S. deal, but it shows how other nations are positioning themselves competitively while our export numbers slide.
Everybody else is setting the table while we're still deciding what to wear to dinner.
That's about right. There's also a study from the Meat Institute finding that mandatory country of origin labeling would cost the U.S. industry $1 billion annually, with consumers bearing most of that financial burden through higher prices. That's a policy debate that keeps resurfacing, and it ties directly into the EU's own livestock strategy discussions, where their EESC committee is pushing for mandatory origin labeling on their end too, plus a dedicated funding stream outside their common agricultural policy. And speaking of trade disruptions getting resolved, Mexico and Colombia fully repealed pork trade restrictions by mid-July after a pseudorabies discovery, and those restrictions had been costing the industry $6 to $7 million weekly before that resolution. It's a good example of how fast these disruptions can hit the bottom line and how much relief comes when they get sorted out. Jim, does this kind of thing bring back memories for you?
It sure does, Brock. Takes me back to December of 2003. One cow up in Washington state tested positive for mad cow disease, and within about 48 hours, our export markets just vanished overnight. Japan and Korea, who were buying a huge chunk of our beef, shut the door completely. Fed cattle prices dropped hard and fast, and everybody down here was glued to the radio trying to figure out how bad it was going to get.
How long did it take to get those relationships rebuilt?
Took years. Japan didn't fully reopen until 2005, and even then it was with heavy restrictions. Full access wasn't restored for the better part of a decade. One incident can shut a market overnight, but it's the trust and paperwork you rebuild afterward that determines how fast you get back in the game.
That's a lesson worth remembering as we watch this 17% export decline play out. It's not one single incident this time. It's more of a gradual erosion, but the principle holds. Rebuilding demand takes time and consistent effort. All right, let's get into our third and final deep dive, which is all about the volatility we've seen in cattle futures this week because it's been a rough ride. Yahoo Finance reported that August live cattle futures fell $2.65 to $224.42.5, hitting a 4-month low. Weekly losses came in at $10.77.5 for live cattle, and feeder cattle dropped 65 cents to $345.95, which is a 5-week low close.
That's about as useful as a screen door on a submarine watching prices sink like that.
It's been a tough week for anyone holding positions, no doubt. But there's a recovery pattern worth noting. The cattle site reported feeder cattle futures firmed up on Thursday after hitting those fresh lows, and then stabilized again on Friday as the market awaited the USDA's cattle on feed report. That report finally dropped, and it showed cattle on feed numbers up 2%, with both placements and marketings coming in lower than expected. There were also estimates ahead of that report projecting higher cattle on feed numbers with lower placements and marketings, and those estimates turned out to be pretty close to what actually happened.
When the estimates and the actual numbers line up like that, at least you know somebody out there's got a good crystal ball.
It does suggest the market had a decent read on where things were heading, which is reassuring after a week of volatility. For producers, what this all means is that we're likely seeing a market that overcorrected to the downside and is now finding its footing. The combination of a 4-month low in live cattle, paired with a cattle on feed report showing supply growth but softer placements, suggests we could see some stabilization in the near term, though I wouldn't call it a clear bottom just yet. Watching how futures react over the next week or two, especially with that border reopening news layered in, is going to be critical for anyone making marketing decisions right now. Jim, what's your read on all this?
My advice, and I've said this for 40 years, don't bet the ranch on 1 week's worth of numbers. Wait and watch, because this business always finds a way to surprise you.
That's about as solid a note as we can end on. Folks, that wraps up today's Tuesday market update. We've covered the latest snapshot, the border reopening situation, global trade developments, and this week's futures volatility. Thanks for tuning in, and we'll catch you next time here on Cattle Market, guys.
Y'all take care and keep an eye on them cattle.
That's all for today. Remember to sign up for our free daily briefing at herdadvisor.com. And if you want complete cattle records without the hassle, try the Cattle Record Guide free for 14 days. Enter records from the field with your gloves on. Just say, "Hey Siri."
Catch you in a couple days.
All right, see you then.